Welcome to Candid Policy Conversations, where we're bringing policy to the people one webcast at a time. I decided to launch this effort to generate timely conversations around policy issues and decisions that are being made to attempt to address longstanding inequities, as well as recent ones brought on by COVID-19, as well as the amplified calls for racial justice. This fall, I'll be chopping it up with colleagues across the field of higher education, discussing policy reform, current news, emergent issues, ways for us to be better informed and engaged in the policy process. Over the next few months, my hope is to release 10 different episodes with topics ranging from the impact of the census on higher education, policymakers' role in addressing racial injustice, empowering queer and trans communities, college promise programs, campus sexual violence, supporting undocumented and documented students, and much more. Each episode will welcome a new guest to share their time, research, and insight to help us understand what's happening in higher education policy. We hope to have 15-minute conversations with a wide range of topics and guests, hopefully digestible policy updates that help us engage in current events, as well as fostering ways to discuss, critique, advocate, and participate in the policy process. And as a bonus, create asynchronous content for your education policy related courses. And of course, your host throughout this time is me, Eric Felix, an assistant professor at San Diego State. I'm a critical policy scholar that examines the potential for reforms to improve racial equity, primarily in the context of community college. Today's theme is the promise of college and the subsequent student debt. Our guest for today is Dan Collier, a research fellow at the W.E. Upjohn Institute and a lover of lakes, Subaru, and everything income-driven repayment research.
My name is Dr. Dan Collier. I work at the W.E. Upjohn Institute for Repayment Research as a research fellow. I'm focused on looking at the outcomes correlated with the Kalamazoo Promise.
Dan, thank you so much for being here. I really appreciate your time and the ability to lean on your expertise and your research insight. Before we get into talking about policy and the research you've done around it, just tell me a little bit about how you've been able to sustain your mental health, your research agenda through all of the COVID-19, the pandemic, and remote work.
Yeah, no, we've been really good up here in Western Michigan, even with the Chicago and Indiana crowds coming in. So we've been able to go out and do a whole lot of things. My wife and dog and I tend to go to Lake Michigan about 2, maybe sometimes 3 times a week and just go hang out on the shoreline towns. So it's been pretty nice and pretty low key. I've been not in my office since March. So it's been interesting working. I normally work afar from people, but not, once in a while I'll pop in and be like, hey, I still work here. What's up, guys?
Yeah, so that's good that you mentioned going to Lake Michigan a lot. One of the things that I thanked you for the introduction was a lover of lakes, Subarus, and IDR research. So I'm glad my background in context research worked out with that.
No, great description.
So let's learn a little bit more about your work. Can you tell me a bit about your research agenda, but more importantly, what drives you to do it?
Yeah, so I have arguably 3, but I'll talk about 2 right here because that's the main topics of what we're going to be touching on right now. So as I said, I work at we'll be returning back to the W.E. Upjohn Institute for Employment, and I was hired there to look at outcomes correlated with the Kalamazoo Promise. While I was at WMU, I had access to institutional data that nobody else had access to, including those at the Promise in Upjohn. And I got a nice little paper out of that called Bridge of Promise, and it's in the Journal of College Student Retention. So many journals can never remember their exact names, right? And I wanted to further my agenda, and I wanted to help Upjohn out quite a bit because the field is unique in that we've looked at long-term outcomes of promises and we've looked at the causal effects of promises, but we have yet to look at what happens to people who are promise students and how we can help more of them progress. I also look at student loan debt. I recently got a fellowship, the SLLI fellowship through Student Protection Borrower Center.
Great.
Unique opportunity to join two proprietary databases to look at the outcomes of having or being an income-driven repayment, and we're going to have a chance to look at who's in income-driven repayment, which is rarity.
And so for the Kalamazoo Promise, I know actually you had me reading quite a few articles in preparation for this convo, but I think you mentioned the Bridge of Promise, where you, your colleagues Fitzpatrick and Houston and Archer.
Mm-hmm.
Could you talk to me a little bit about the implications for community college students that access the K Promise?
So we don't know very much about that still, because we don't have a good, we have yet developed a relationship with KVCC to where we can get a fair sample or control sample for the treated Kalamazoo Promise students. So we don't know what they look like in comparison to the KVCC students. I know that my descriptive paper that is also coming out in the Journal of College Student Retention, it was just accepted about a week ago, suggests that they retain at KVCC to a higher degree when we take out the people who transferred. And that they perform slightly better than the average student at KVCC. But as far as the community college goes, it's difficult to talk about the promise in that context because most of the outcomes are correlated with four-year degrees here.
Okay. Many of us describe our scholarship within the policy context. Others may be at the periphery. How does your own scholarship enter the state and federal policy conversation? If
we're talking about the promise research, it doesn't really answer anything as far as the federal policy goes, unless Joe Biden's able to get tuition-free policy pushed through if he becomes president. You know, that's not a foregone conclusion. So right now, my promise research is just helping us trying to figure out what something like the Kalamazoo Promise, which is arguably one of the most generous promise policies out there, could do. What that looks like. How is that looking like if we get other people to start doing similar research on the Tennessee Promise or El Dorado or other promises, right? Mm-hmm. So we're just now, I mean, there's hundreds of promise programs at the moment, and in doing work that says that this thing works in this way is really difficult because all those promises have different characteristics, and we still don't know what works best or how it works in many cases. As far as my student loan debt research goes, I know that I've had several pieces already make it on the Hill, which is super cool. Now the next step is to get cited in a bill, which would be super, super cool. But I know I have the attention of some people who are interested in at least thinking about what it would mean to change the terms of income-driven repayment and who would that most affect.
So when you say that some of your work has made it up to Capitol Hill, what is your work advocating for? What are you recommending legislative aides tell their bosses in terms of how to formulate better policy?
So right now what I'm advocating for is I have two pieces. One is a non-national representative piece and one is a nationally representative piece that illustrates that if you change the terms of income-driven repayment, you're likely going to harm female borrowers the most. And potentially people who live in rural areas, and it may not be these savvy borrowers that have been long conjured to suggest that IDR needs to be changed because they're high-earning people taking advantage of it. It doesn't seem to be that's the case. So what my pieces have really been arguing in my behind-the-scenes conversations have been arguing is we really need to consider who would be most harmed in changing these things, and if we're gonna focus on rebuilding rural areas, and if you see that there's a correlation between people living in rural areas and enrollment in income-driven repayment, that's not a terrible thing, and that could be used to help rebuild the rural areas. And if changing that to better advantage the federal government versus the individual, how will that change where those people live?
So I know there's a lot in the news, especially with the COVID-19 pandemic, thinking about how do we provide relief to college students, graduates, those that have large debt upon graduation or even stopping out. We've had news recently exploring Secretary DeVos's implementation of the President's executive order extending the deferral of student loans to the end of the year. and also your work with your colleagues through the Academics Upshot that talked to us about the impact of COVID-19 on income-driven repayment. So let's dig into some of those news topics, shall we?
Sure, let's do it.
All right. So the first one, I really enjoyed the ease of reading your report with your colleagues about how IDR is being influenced and impacted by COVID-19. And so if you just want to share for our colleagues that are listening and tuning in about what your work describes and what the impact of COVID-19 has been on income-driven repayments.
Yeah, so the first part of that piece describes the national study that I was just from where it was just talking about. In that, we still know very little about who is enrolled in income-driven repayment, and we are seeing on multiple occasions it seems to be more women than men, and it seems to be the likelihood is it's more minority borrowers than white borrowers, and a few other attributes that go with that. Definitely people with high debt of $50,000 and more. But what is going on, or what we believe will happen here with the COVID-19 event, is that we're going to see a dramatic increase in income-driven repayment, especially if we take the lessons of the Great Recession in mind. We saw huge spikes afterward, and that's because young people unemployment were dramatically increased during that prior event, but it lagged. It wasn't right away. It was like 2011 or 12 or 2010 or 11 before those spikes hit. So you saw a lot of people flow into income-driven repayment, plus the terms of IDR were opened up a little bit. The terms of IDR are pretty wide open at the moment, and we should expect to see a lot of people go into that repayment as financial safety if they're able to access it. 2020, there's a few articles, you can go look them up, prior to the COVID event, that they were talking about, like, it's the hottest job market that anyone's ever entered.
Yeah.
And that was true. And now it's the worst job market that anyone's ever entered within just a short period of time. So we can expect younger people, specifically new college graduates, to flow into that, and even more established people who might have lost their jobs, as we're seeing permanent unemployment increase over the last couple of weeks. I believe we've seen that. So we have that piece. The problem is, if everybody goes into income-driven repayment, there's going to be a subsidy, right? And there's going to be a subsidy for the federal government, and that subsidy is already slated at tens of billions of dollars. So what's going to happen whenever we encourage more people to go into it, because they're going to look for financial safety, and we're going to point them to the resources that give them the financial safety that they need. So when they get to the point of going to forgiveness, if they get to that term where everything is forgiven, then that bill is going to balloon on the federal government one way or another. We're paying for it.
Right.
So
I think one of the things that we think of is the way that our research informs policymakers and the tweaks that they may make to policies related to student loan borrowing and relief. But for policy targets for the individual borrower or student, would you advocate for them to explore IDR as an option right now? And
I'm always reluctant to give out advice on which repayment scheme is best for you, because if you go into income-driven repayment, that has lifelong consequences, or because you're not likely to come back out of it because of the eventual forgiveness, or if you go into the traditional. So I'm not a big fan of giving that advice, but what I will say is that you need to go to your servicer, or you need to go to the federal government's website, and you need to look up income-driven repayment, and potentially get a hold of somebody to talk about what your options look like. Or you can even call your almas, call the schools you graduated from. Those people sit down with you and have a conversation about what might be your best options. So that's the route I would go, because there's a more personalized conversation with the financial aid administrators or student loan counselors, whatever your institutions have.
Great. Awesome. Thanks. So our second topic is hot off the press release from days ago, right? You just share a little bit about what this means to the everyday borrower.
So basically, this as I read it, and there's always fine print, and there's always we can never tell how the Secretary of Education is going to act. I'm just going to throw that out there right now. But it seems like that the president intends to just basically extend what the CARES Act was, and that's, you know, everyone that has federal, and not all federal, but most federal student loans will not be required to pay throughout until 2021, and pay their monthly repayments until 2021, and that if you're in public service loan forgiveness, I believe that those, well, in practice it should, but again, I preface this with I have no idea how the Secretary of Education is going to do things. It should count to your public service loan forgiveness. In that time, you should not be accruing any interest. So it's just an extension of what we already had passed by Congress. The question is, can the president do this? There's a lot of conversations going on whether POTUS is allowed to do this, has the power to do this. And one of the more interesting points is that if POTUS can do this, then the next president, either be it Trump or Biden, could potentially just forgive debt. Something that is missing here, though, and I have an op-ed on this as well through the Upjohn Institute, is that it's not covering private debt. In private debt, if you go look at the op-ed, it takes a larger chunk out of people's monthly income than does the federal debt. So there's a lot of people that have private student loan debt that were underwater, and a lot of those individuals happen to be from for-profit institutions, and they also happen to be persons of color. So this is extraordinary. You know, I'm not going to bang on what the president has done here, because it's extraordinarily helpful to a lot of people. I'm not so sure that I think ignoring private student loan debt is highly problematic, especially for the people who may need it the most, given outcomes correlated with a lot of the for-profit sector.
Right. No, that's an extremely important point in terms of who's been kind of exploited in higher education and driven towards for-profit institutions that tend to be somewhat more predatory. I mean, there's regulations that were passed in the last 5 to 10 years to minimize that, but those loans still persist, and those loans are still attached to those individual students that attended or graduated those institutions.
Yeah, absolutely, and it's a shame, because they're probably, I mean, they definitely need a lot more help than what we've been giving them.
Yeah, great. Well, that's a good point to draw on, and something that I haven't thought about. So I'm glad that we're having this conversation. So you're digging through your hard drive. You're finding your dissertation. You're gonna read a participant quote. Is that what you're saying?
Yep.
All right. I'm usually too hesitant to open that back up and see what I wrote, but you know, more power to you.
I wanted to make sure I got this quote right. This quote always sticks in my head, but you know, it's even things that stick in your head are not verbatimly correct. So this participant once told me, "The loans are the baby I cannot have, the house I cannot own, the car I cannot drive, the retirement that eludes me. They have robbed me of my peace of mind, and everything revolves around them." 34-year-old female who is white.
So yeah, it's a pretty messed up world when people feel like they're saddled with debt, and that's their house, that's their car, that's the life they can't have, right?
Yeah.
Given that they're in such a deep financial hole.
Things, but if I can alleviate that kind of pain, because that correlates with so many other things: life satisfaction, suicide idealization, you know, just being a socialization, a bunch of other issues. If I can help ease that through my career, I'll be happy with that.
Well, Dan, I appreciate all your research, your time, and your insight. As we start to wrap up, just wondering, how do we move forward? How do we become more informed and better advocates for student loan debt, relief, and repayment?
To go out there and try to fail. Really, academia is filled with failure. Like, there's so much failure, and every win that we have it's predicated on a ton of other failures, and it's okay if you do, like, because you're just going to have to get used to that.
Well, awesome. Thank you all so much for tuning in to our first webcast for the Candid Policy Conversations. I want to thank you for tuning in. To learn more about our guest today, follow the bit.ly link below, Collier Talk. Visit our site, use the bit.ly link with capital HE Policy Talks. And lastly, our future speakers are listed here throughout the months of September, October, and November. And if I find time, maybe a couple extra ones for the December winter break. All right, y'all. Peace.